Adam, I feel like it was in some ways a reluctant call because you were underweight over the summer. Did anything change fundamentally with actually Tesla, or is this more of a macro call now?
Oh, look, Tesla, we just think it's a must own here. And I say that because we frequently speak with investors that say, Adam, I want to put together a long-term EV or AV exposed portfolio, but I'll never own Tesla. And we kind of take a deep breath and say, well, then you run the risk of not owning the company that could make all the other stuff you do own obsolete. And so while we do have better ideas in our recommendations for EV and AV exposure than Tesla, one of our most important messages to investors is that you still have to own Tesla as a bit of insurance due to their leadership and ability to attract and importantly to deploy capital. And I think the next year or two, you're going to see them really dial that up as they become an infrastructure company, drafting on all these projects and infrastructure bills all over the world.
Adam, just to be clear, good morning, it's Guy. You're not saying that you shouldn't own other EV companies. You're just saying that Tesla needs to be part of the mix in terms of the portfolio that you're putting together.
Yes, that, but also that due to the fact that Tesla has zero internal combustion entanglement and is in a position during an arms race type of, forces to attract capital and talent, perhaps more efficiently, more advantageously, without having to defend any of the melting ice. That is something we think is underestimated. So sure, there's lots of legacy companies. They're all, if you listen to what they're saying, they all sound like they're Tesla. And in many ways, they're frankly obsessed with Tesla. They would, if you listen to 30 seconds of a Volkswagen or GM, or you'd think they didn't sell any internal combustion cars. And it turns out they sell 98% of the revenue for ICE.
They start from a much lower multiple. And Tesla's trading on some pretty punchy multiples, you could argue. We can debate that point, but let's just park it to one side.
You're right.
Volkswagen's gone from, 120 to 240 in the space of about 6 months. You do wonder whether there's more. These guys were valued as if they were going out of business.
Yep.
Now they're starting to get a little bit of the Tesla halo. I'm just wondering whether you get a bigger bang for your buck by owning some or a mix of all of these rather than focusing on Tesla.
It's a great question, Guy. And Volkswagen's covered by Harold Hendricks out of London. He has an equal weight. We think that there's great potential, and for Volkswagen and for many other legacy OEMs, the value of their EV assets may still be potentially very, very undervalued by investors. The thing that we think is being ignored is the 98% of their revenues that's coming from ICE may be dramatically overvalued. Guy, we're running scenarios where the value of ICE is massively negative. And so these auto companies have the burden of managing out this asbestos-like, toxic tort-like, tobacco-like liability and still being able to attract ESG money to be an EV winner. And we think that that is going to prove, it's going to force these companies into these uncomfortable but necessary strategic outcomes.
But it's not like everyone's owning an EV tomorrow. I mean, it's the same thing with the oil and gas industry. It's not like tomorrow no one uses coal or oil anymore.
It's not about tomorrow. I think that the investors we engage with understand this will take decades to see through. And analogies to the rollout of the electric utility grid, candles didn't just collapse overnight. Horse and carriage shared the road with the automobile for 20 years plus. Fixed wing aircraft and dirigibles were in the skies at the same time. So it's just that what the market sees and knows is happening, those are the bets that are being made today.
Adam, where is the value in Tesla? Is it, as you say, almost as an infrastructure company? Is it in the chemistry? I'd be curious to know your views on who you think is going to come out with a solid state. And if that's not Tesla, is that a problem? You're kind of more cautious on China as well. I'm interested to see kind of where that valuation kind of stacks up versus the others as well. What is Tesla? Because I'm still, years after Tesla was launched, confused as to this kind of shape-shifting valuation model that is applied to this company.
So I think a good heuristic, if you think about the value of Tesla, is to think about Apple, okay? One of the worst kept secrets in tech is that Apple's developing a car. how would a company like Apple or fill in the blank other mega tech companies, how would they approach transportation? How would they approach autonomy, electrification, networking, software, AI? It's more than just unit times price, okay? If you solve for just units for Tesla, of course, you get these really ridiculous things like Tesla needs 70% market share. And of course, then that reinforces people saying, I'll never own Tesla. But we think Tesla is an installed base play, growing 1 million cars on the road to then 30, 40 million cars by the end of the decade, and getting an average revenue per unit or an ARPU from their monthly active users, and getting software-like and software-derived revenues from that installed base. When you start doing that, frankly, you have Tesla not covered by old-fashioned auto analysts like me. I genuinely believe this, Guy, if we at Morgan Stanley do our job properly over some number of years, it will be covered by our tech or software team, because it'll make sense. That'll be the model, and they can comp it versus those types of stocks instead of looking at a legacy auto company and saying Tesla looks expensive and then dropping the mic.
So how do you, okay, that's one way to look at that. So Tesla becomes a tech company, but do the tech companies become car companies? Like, how do you see the Apple car playing out?
So this is important. We think that Volkswagen, obviously, as a national champion and one of Germany's largest private employers, they're going to make a run at EVs and they'll have some degree of success. We don't doubt that. So you could say that Elon might be annoyed or a little, distracted by Volkswagen. But what we think he's really focused on are the Apples and that genre. Those are the ones that can really, really get a big chunk of the market globally and in the US. So we think that those a risk to Tesla, the two risks are mega tech getting into transportation and being able to do things that Tesla does and even more, right? Because they can attach to their ecosystem. And then the other concern, which Guy brought up, is, and it's not really to single out China or even Tesla, but we think as the automobile becomes a transport utility like telecom and electricity, you'll see national champions and national security walls going up where this industry isn't global anymore, and it's not right to have a U.S. private company taking people around in the streets of Wuhan over time.
Adam, one final threat, which I always think about when I think about Tesla as well, and I appreciate what you're saying about the migration to kind of software-like multiples. What does your modeling tell you about the valuation of Tesla if we get bond yields? We're at 1.6 now. Say we get to 2. Say we get to 3. Say we get to 4. How does that change the valuation case for Tesla?
Mathematically, it can only hurt it. There's just no way around that. I guess then the question is, does it hurt it more than any other opportunity that's looking at a $5 or $10 trillion TAM trying to disrupt it? So ostensibly, there's no way around your answer. You got me. What I think, it depends who you ask, though. If you ask software and tech hardware people about Tesla, many of them look at it as stonkingly good value. If you ask auto people and people in my world about it, they say, I can never own it. It's ridiculously valued. Maybe the truth is somewhere in between. Maybe it's both.